Hey guys, Sean Pruitt, president of Kingdom Exploration. If you follow the oil and gas markets, you're probably scratching your head right now. There's a lot of things happening. OPEC cut an additional million barrels a day. Car sales have crashed. I mean, they're writing letters to the White House like, for God's sakes, stop pushing these mandates on us. We have all this inventory. There was a gentleman that got on Fox News that owns 30 car dealerships and has millions of dollars worth of EVs, electric vehicles, and he's only selling single digits. It's crazy. It's sad. We don't want your electric vehicles, and stop shoving them down our throats. Everyone's complaining about them. There's not enough charging stations. The limited ability to drive cross country, it's a joke. Shale oil has increased unexpected 900,000 barrels a day. I'm going to be talking about that. I want to talk about oil demand. The most interesting news that nobody's talking about. If you've heard anything about it, please share it with me. But nobody's talking about the fact that the Fed is looking to cut rates 6 times next year. Okay, and the bond market is putting their money where their mouth is and acting as if that is imminent. Okay, and so let's look at current oil prices right now. WTI crude is trading at $75.89. Brent crude is $80.77. OPEC reaches deal in principle on oil output cuts. Now, it's nice to see that OPEC is being a united front. It's not just Saudi Arabia carrying the burden of these cuts. Saudi extends voluntary oil cut by 1 million barrels a day until first quarter of 2024. Russia oil export cuts increased by 200,000 for totaling 500,000 barrels a day. Kuwait cut 135,000 barrels a day. Algeria, 51,000. Oman, 42,000. Kazakhstan cut oil by an additional 82,000 barrels. And the UAE cut 160,000 barrels a day. Okay, now let's look at the U.S. economy. U.S. economy was hotter than previously thought, new GDP data shows. Now, I'm going to explain why this data greatly affects the price of a barrel of crude, okay? So the fresh data released Wednesday, okay, shows U.S. economic growth in the third quarter was even better than previously thought. Gross domestic product increased at 5.2% annualized rate, the Commerce Department said. Why it matters, the data from the July to September period is the latest indicator pointing to a booming economy that continues to defy gloomy warnings. Okay, so negative sentiment is at an all-time high regarding the American economy. Okay, you got the Middle East, Saudi Arabia. It's an information warfare. Russia. Everyone's trying to make everyone believe that America is not the same America as we were a decade ago. We're weak, where we can't handle wars, and that's simply not true. Okay, and also we're going into election. You're going to see a lot of negative sentiment towards the economy as well. Inflation cooled to an annual increase of 3% in October from 3.4% in September, according to one measure. So I want to read multiple news articles to show you that this isn't just coming from one source, it's coming from multiple. Bond investors are pricing in imminent Federal Reserve interest rate cuts by the first half of next year as signs of slowing U.S. economic growth and easing inflation became more evident. So the bond investors are putting their money where their mouth is and pricing for imminent Federal Reserve rate cuts, okay? The Federal Reserve will cut interest rates 6 times in 2024 as the economy shows clear signs of cooling down, ING says, okay? So here's an oil price history chart here, okay? Priced in crude, and this is inflation adjusted, okay? And here's the federal rate cuts. And so I'm going to look at federal rate cuts starting at September 18, 2007 to December 2008. So they had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 cuts from September to December, okay, of 08. Okay, so September 07, April, May, June, July, August, September 07, oil prices were $120 a barrel, okay? And then they went up to $196 a barrel. So the price of a barrel of crude went up roughly $70 a barrel. Okay. And then, of course, we had this crash here. That crash had nothing to do with interest rate cuts. And it had all to do with the financial nightmare, the financial collapse due to the real estate bubble exploding, okay? But we recovered, okay? And we went back up to $155 a barrel. So if you look at all the interest rate cuts ending December of 2008, right here, 2008 was the last cut. And it took about a month for you to start seeing. So it took about 2 months from the cuts to starting to see the increase here. So we went from $64 a barrel and climbed up to $155 a barrel. So interest rate cuts do work. Okay. Now let's look at and greatly affect the price of a barrel of crude. Let's look at August 1st, 2019, starting August 2019 to March. So August 2019 to March. All right. So August 2019 to March 2020. Okay. So August 2019, let's look at this as a whole here. Okay. So if you look here, we went from roughly $68 per barrel and we crashed down to 22. Now, that had nothing to do with interest rate hikes, and it had all to do with Saudi Arabia and Russia going toe-to-toe and flooding the markets with oil. So we went from $66 a barrel, and then we climbed to $120 a barrel. And the last interest rate hike was March 2020. So if you look here, this is March 2020, okay? And then a few months later, you start seeing oil prices go up. So the interest rate cuts did greatly increase the price of a barrel of crude, okay? When you cut interest rates, more banks lend out money, more people are buying houses, more people are buying cars, more people are using credit. Businesses are multiplying, they're spending more money, and that boosts the economy and increases the demand for crude, okay? I'm going to show you what happens when you increase the interest rate, okay? So if you look at March 17th, 2022 to July 2023. So March 2022 to July 2023. Okay, so let's look here. All right. So from March 2022 to July 2023, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 interest rate hikes, okay? So oil prices went from $107 a barrel down to as low as $68 per barrel because of all the interest rate hikes, okay? Now, next year, you just look at this chart, okay? If I wish I had a chart that compares interest rate hikes and drops and compare it to the price of crude. But you can see here, it's obvious that interest rates do greatly affect the price of a barrel of crude, okay? Now, they are looking to do 6 interest rate cuts, okay, next year, okay? So let's look here. Starting March 17th, let's count 6. 1, 2, 3, 4, 5, 6. So from March to November 2nd, that was 6 interest rate increases, okay? So let's look at November 2nd. Okay, here's November, okay? So starting in November, okay, so we went from $120 oil to as low as $82 a barrel, okay? You look at this roller coaster ride that we had here. This is based upon 6 interest rate hikes. Now, imagine what 6 interest rate cuts will do. Well, you could technically, you could reverse this. And so you could see oil prices going from $82 a barrel to ranging from $100 to $120 a barrel. Okay. I mean, the interest rate greatly affects the price of a barrel of crude. And the Federal Reserve is looking to decrease the interest rate 6 times next year. I mean, you're going to see a spending spree. People are going to be buying houses. People are going to be buying cars. People are going to be borrowing money. People are going to be starting businesses. It's going to cause more people to go out to eat, more entertainment. I mean, it's going to increase demand like you wouldn't believe. It might spur it on to a level of $150 a barrel, but listen, negative sentiment is I look at negative sentiment for oil like the mask. I mean, nobody wants to wear the mask, but nobody wants to offend anybody. You know, it's like, well, I'm just going to wear it because I don't want to deal with those ugly stares. I mean, people are really just negative about oil. And if you don't want to be that analyst that gets on Fox News and says, hey, I think oil prices are going up, I mean, people look at you kind of funny. I mean, there are people that get really excited about it, but people look at you cross-eyed like, hey, you know, haven't you been paying attention to the economy? I mean, have you been paying attention to what's happening in the U.S. shale patch? And so if you look at U.S. shale, there was an increase of 900,000 barrels of oil a day, and they're expecting to see a decline. Okay, now that could be explained. Raymond James, I believe, he said that 2/3 of that increase came from smaller mom and pop oil companies that are goosing their production in order to be a more attractive to buyers. Okay, and that's something, if you look at my last video, that's something I mentioned in previous videos. I guarantee you they're goosing production. I mean, you think that when Pioneer sold their company, you don't think they weren't doing everything they could to exasperate their oil production in some way, either goosing it or cooking the books or something. I mean, I'm not saying that they're deceiving people, but we're talking about billions and billions of dollars, and we're talking about not one person make a decision for the entire company. There's hundreds of people that make decisions that greatly affect their output in numbers. Okay, so there's a lot of people involved, and and these people want to make money. And so, bottom line, the U.S. shale patch, they're sprinting right now to keep up, to increase oil output. But you can't sprint forever. At some point, you gotta go back to jogging, and they're not right now. They are developing like crazy, and so all they've done is kick the can down the road as far as the decline. We didn't see a decline this year. We saw an increase, and so we should see a decline in U.S. shale maybe next year, maybe in the following year, but eventually we will. Okay, and Saudi Arabia, the Middle East, OPEC, they've made the decision to offset the increase. Now, I truly believe that this is actually a very good sign for the oil and gas industry, because if Saudi Arabia, who has more data on oil demand and oil production, because they work with Russia, they're Saudi Arabia, they work with Iran, Venezuela, all these, the largest producing oil nations are in this group. They're partners in this. They have a data that the EIA, the Energy Information Administration, and various news agencies do not have access to, okay? And so if they were to increase oil output, kind of like the days of 2019, causing oil prices to crash, that would say to me they're concerned about shale production, okay? The fact that they're cutting production, putting themselves in a position to where they lose market share to American oil producers, says to me that they know that this is going to be short-lived, that shale is falling. Okay. And the thing, if you don't understand the shale industry and the geology of shale, to put simply, they have to spend a lot of money to frack a shale well. Back in the 80s, 90s, early 2000, we didn't have the ability to extract commercial volumes out of a shale formation. But because of fracking, very expensive, it's kind of like using dynamite, but only they use a frack, high pressures of fluids with chemicals. They break up the formation, causing more porosity to help the oil flow through freely. But when you manipulate the formation, a formation that was never intended to produce at these commercial quantities, it will eventually go back to what Mother Nature intended, tight porosity. So you break up the formation, oil flows through, but that formation works as a massive filter. All that broken up formation will flow through the oil-bearing formation, causing the oil to eventually to drop to very low levels. So it has a fast production output but a faster decline. Oil shale formations decline 45% a year. So for every 1 million barrels of oil a day that you increase, you got to find another 450,000 just to maintain that million barrels a day. They're chasing their tails out here. How long can this last? Okay. And so it can't last forever. And so OPEC sees it and knows it. It's called the Red Queen syndrome. Okay. So OPEC knows it. Okay. And that gives me more confidence in that. And so that's a good sign for global oil prices. So that gives me a strong confidence in the price of the barrel of crude moving forward. So, all right, guys, I'm Sean Pruitt, president of Kingdom Exploration. If you're interested in investing in oil and gas, we got a new program coming up very soon, next couple of days. It's a 35-well project. If you're interested, go into the description below, fill out the form. I'd love to chat with you. You be chatting with me, and sometimes throughout the week, I'll take time to make a few phone calls. If I can't get to you, forgive me. Send me a text, send me an email. I'll get to you as soon as I can. But please feel free to reach out to me. All right, guys, thanks, and we'll talk soon.